Hello and welcome to our conversation on financial reporting. In this session, we will understand the concept of share capital and we will try to see how the share capital appears on the financial statements. And for that, I would like to pick up a company which is going for an IPO. The purpose of taking a new company or a new IPO is to show how the capital changes from pre-IPO to post-IPO, number one. Number two, we picked up Naapbooks Limited because it has only one type of shares, that is equity shares. So Naapbooks Limited was incorporated as Naapbooks Private Limited in 2017, then converted to a public limited company and the name got changed to Naapbooks Limited in 2020. And they are engaged in developing and providing information technology solutions to various companies. The company develops Fintech App, cloud consulting, blockchain apps, mobile apps, web apps, embedded app products to its different clients. The IPO, which was opened on 1st September 2021, and the closing date of this IPO is on 6th September 2021. And they are going to the book building approach where a price range is given. And the price range is 71 to 74 per share. And the face value of the share is rupees 10 per equity share. So that means the shares, if issued at the highest band, that is 74, then the issue will be at a premium of 64. Shares of rupees 10 issued at a premium of 64. The market lot for purchasing is about 1,600 shares, and the company is expected to be listed at Bombay Stock Exchange, SME, the small and medium exchange. The issue size, this is not the usual listing of the main stock exchange. The issue size will be 5,39,200 equity shares. The 5,39,200 equity shares of rupees 10 at 74 or 71 in that band. So expecting that through this equity issue, the capital or equity is expected to increase by 3.99 crore. So the objects of the issue, what are they going to do with this money? The company has mentioned in its prospectus submitted with SEBI that the money raised will be used for working capital requirement of the company and the purchase of certain equipment and to meet other general corporate purposes. Let us see what happens. What is the impact of this issue on their capital, which will appear on the balance sheet? The authorized share capital of this company is 20 lakh, 2 million equity shares, face value of 10. But we'll see that the authorized capital has also changed in the recent years. A part of this authorized capital, which is issued, subscribed, and paid up before the date of this new IPO, is 13,17,400 shares of rupees 10 each. So out of 20 lakh equity share, the company issued 13,17,400 equity shares before the date of this issue, that means before September 1st. The present issue, which was open on 1st September is 5,39,200 shares of rupees 10. This is the face value. And the issue price is in the range of 71 to 74. So if it is the face value is 10, the issued capital will increase by 53.9 lakhs. Okay. And so as a result, because of this issue, the new issue plus the existing issued capital, the paid up capital after the issue will become, the number of shares will increase from 13,17,000 to 18,56,000 of rupees 10 each. But this 13,131,000, okay, this value, how did that change over a period of time? Okay, so let us understand this 131.74 lakhs. Okay, so this 131.74 lakhs got accumulated over a period of time from the date of incorporation till the date of the IPO. How is that? We can see at the time of incorporation, that means at the time of formation, 10,000 shares were issued of rupees 10 at 10 at the time of incorporation, at the time of starting. And the company got 10,000 shares into 10, 100,000. Was there any share premium? No. Then on June 5th, 2020, 5,50,000 shares were issued as a bonus share, which we'll see in detail after this slide. So 5,50,000 shares were issued to the existing shareholders of 10 at 10. So was there any share premium? No. Did the company get any cash? No. This is other than cash because the reserves got converted to the capital. Once again, on June 5th, 2020, 7,22,200 shares were issued in the process of converting the loans into equity. So the share increase, the capital increase, not because of the fresh issue to the outsider, but one by bonus issue, the other by converting the loans into capital. And both these are called the issue of shares for consideration other than cash. In the process of issuing bonus shares and in the process of converting the loan, the capital increased from 100,000 to 128 lakh, 128 lakh, the total capital increase. Once again, in the month of August 26, August 2020, 28,000 new shares were issued on a preferential allotment. That means to the existing shareholders or maybe to their friends and relatives. 28,800 shares were issued. But this time, the shares were issued at a price much above the face value, and that was at 71. So there is a premium of 61 premium. So premium collected was 17,56,000. And on September 23rd, before this issue, when the company decided to go for the public issue, once again, 6,400 shares were issued. The summation of all the shares is exactly equal to 131.74 lakh capital. So the capital increased from 1 lakh to 131.74 lakhs. Now let us observe this bonus issue and the conversion of loan. 550,000 shares, fully paid up equity shares, were issued as a bonus shares by capitalizing the surplus in the profit and loss account. That means the company issued bonus to the existing shareholder. The bonus issue is capitalization or conversion of reserves into capital. Well, did the company get any cash? No. It is only an accounting treatment of converting the reserves into capital. In the same way, conversion of loan, 7,22,000 equity shares of 10 each were issued, the shares were issued to the bondholders or the loan giver at par. In the process, the impact of these two transactions on the balance sheet, in the first case, the reserves will go down and the capital went up. In the second case, the loan went down and the capital went up. So in the process, by issuing shares, by converting the reserves into shares, by converting the loans into shares, the capital has been increasing in the last few years. Now let us see this 131 lakh capital. How does that appear on the balance sheet? Okay, so let us see the balance sheet of the company and understand that. So in the balance sheet, if you observe the balance sheet which has been given, submitted along with the forms a part of the prospectus, that you can see that authorized share capital increased, the company increased the authorized capital. In the process, we also saw how 1 lakh equity paid up capital increased to 131 lakh equity capital. So this is the sources side of the balance sheet to show that how the company increased the capital over a period of time by partly issuing the shares or converting the share reserves into capital, converting the loans into capital, and also issuing the shares at a premium to the existing shareholders. We also know that every prospectus mentions and gives the rights of the shareholders. The rights of the shareholders, as mentioned in the prospectus, is to right to receive dividend. The right to receive dividend if declared. The right to receive the reports, annual reports and notices to the members. Right to attend the general meetings, to exercise votes unless they're prohibited by the law. Right to vote on a poll either in person or by proxy in accordance with the provisions of the Companies Act. Right to receive offer for right shares or bonus shares as and when the company issues makes those announcements or takes those decisions. Right to receive surplus on liquidation subject to statutory and preferential claims being satisfied. We know that the equity shareholders are the residual claimants. So therefore, they will receive the surplus only after meeting all other obligations. Right of free transferability of equity shares. That means every shareholder, after listing, they have a right to sell at any time, at any price, as per the market in the stock market. Such other rights as may be available to the shareholders of a listed public company. So these are generic rights of the shareholder, but in a prospectus, every company is also required to reiterate these rights. So we saw that how a IPO affects the balance sheet of a company and how the capital, the company tries to build the capital, increase the capital to to knock the doors of the capital market. This is a small new company. Now the question is to invest or not to invest. So the focus of this presentation is not the financial analysis of this new IPO, but it is only to show the capital and the change in the capital and the impact of the capital on the balance sheet before and after the IPO. Thank you very much.